I think it's because I'm backstage, Ben.
What you doing? You look frozen.
Good morning, everybody. It's Dan Basse and Ben Buckner. It's February 5th, Thursday. We had a very exciting day in the soybean market yesterday. Record volume, 930,000 contracts. We only have 899,000 contracts of open interest. So every contract traded once yesterday. And again, as economists, you try to set up and look at longer term trends. You try to read things, and rain across Argentina, some of the dry areas last night. Brazilian yields coming in very strong. China still buying in Brazil, and basis levels leaking sharply lower. And then Trump comes out, of course, and makes a statement about China, asking China to buy 8 million tons of U.S. soybeans. So there you are, Ben. I don't know where it really goes from here. But because of the potential of 8 million tons of old crop demand, it does leave the market in a much different position. And everybody's asking when, where, and how. And so I called this morning to all the export folks, and no business today, but we'll see if anything comes down the road. Over to you, Ben.
Yeah, we'll just have to do this every single day, I guess. And you got the market's kind of, I think, being driven by two things. One is ignoring geopolitics. You've got adequate to oversupply, especially in wheat and to some extent corn. So that market quantifiably leaves you without volatility, and it's been very dull. Periodically, you get days like yesterday where you've got potential change in supply and demand because of politics, and that leaves, I think, a lot of uncertainty on the table. And I think that is the issue with the soybean market, at least, is we'll kind of get into why we're pretty cautious here. We are looking to catch up on sales, looking at some new crop sales because of big picture fundamentals. But you can't disprove or prove anything at this point with respect to soybean trade over the next 3 to 6 months. So we get why there's going to be a lot of volatility. But we did want to highlight some of the facts going on this week. And one of them is we've noticed that because of China's buying of 12 million tons of U.S. soybeans for old crop delivery, there was a literal flotilla of soybeans heading to China at the moment. So we kind of count all vessels going to China from the U.S. and South America, and we come up with something like 12.8 million tons. That is a record by far for the month of February. Follows a record for the month of January of about 5 million tons. So there's an incredible amount of soybeans that China is going to have access to in the next 30, 45 days. And it's not just the U.S., it's Brazil, counting, vessels at least scheduled to load in Brazil in February. It's the highest on record. So total export commitments of soybeans out of Brazil, 14 million tons, and that is to China and elsewhere. So there's a lot of beans heading to importers and heading to China specifically. So we do start to think if you add 8 million tons to China's existing stockpile of beans, it's going to be a pretty large stockpile. And so then we kind of get into, once again, the viability of sustained buying from China, which again, we can't disprove, but China's got a lot of beans. They are losing quite a bit of money with every cargo of U.S. origin they purchase relative to South America and Brazil in particular. So as expected, we saw a pretty substantial weakening of Brazil's interior and FOB cash soy markets yesterday. I think crushers are concerned about a glut of supply now should China actually buy the 8 million tons of old crop U.S. soybeans. But now Brazilian beans for March and April, 80 cents below the U.S. market. So I think you do have to, it's going to be hard, but what do export sales, what do export shipments out of the U.S. look like over the next 6 months? Probably the demand from everyone except China, maybe Mexico, drops to zero pretty quick. So what are you left with as an annual export total? Still, I don't think it's going to be incredibly robust, but I do think the market's got to digest the potential for in stocks somewhere 200, 240 million bushels. That looks different than it did 24 hours ago. So I think that's what the soybean market is accounting for today. But we didn't want to communicate like we did in November. China's got a lot of soybeans. Brazilian soybeans are cheap and a lot cheaper than the U.S. So this is all politics, we think, if there is an adjustment in flows. Also in the background, it's happening. I think this would be maybe even more exciting if it were September, October, but we are going to see this week Mato Grosso probably having harvested 42-45% of their soybean crop. Everything's moving along there. Mato Grosso, Sol, Paraná, like you mentioned, where we're kind of quantifying record yield potential in everywhere we've been so far. And it's starting to rain in Argentina like the forecasting model said it would. So what you're looking at on the left is 48-hour gauge measured accumulation. And that little dot that spans the northern part of Buenos Aires and southeast Cordoba, that is the Iowa, Illinois of Argentina's corn and soybean belt. So this rain's timely. It's very helpful. It's going to rain a lot in the next 2 weeks. That is what is on the right. And I think that will kind of, again, every day measure rain gauges and what they pick up. But the models, every forecast has been very consistent, kind of oddly, almost perfect agreement across the gamut. So it is going to rain a lot in Argentina and southern Brazil, stabilizing yields there. And the monsoon continues to perform in northern Brazil. So today, at least, not counting on a safrinha corn issue in northern Brazil. So you got the same kind of features of the market that we had, I think, in October and November, and that fundamentals on paper do not look bullish, but we've got politics, which are important. The second most important determiner of price, and unforecastable, at least this week. So that is my take on things.
I think it's a good take, Ben, and I would close here, and we'll talk about this. Trump is transactional. We saw this in the cattle market last fall. We saw it, of course, in soybeans last October. Now we're seeing it again, but China is tactful. They are talking about 5 million metric tons of rolling out of the reserve. They don't need any more reserve soybeans. So, as you think about this going forward, China hasn't bought anything yet, but where I come down on this is I don't think China's going to buy unless they get something out of this. That's what I mean by tactical, which, they need a drop in tariffs like we had in October. There was a fentanyl tariffs cut in half. Then we'll get something done. But I'm watching to see if Trump is willing to do anything on additional tariff cuts to China in the days or weeks ahead. Everybody have a good day. We'll be back soon with talk about what's all going on in the grain markets. Lots of excitement yesterday in terms of Trump and soybeans. Be